Hi everyone, Wade Curtis here, founder of Curtis Property Group. Thanks for tuning in. I've got something really exciting I want to talk to you about today, and it's something we're helping our clients with on a regular basis to be able to expand or take their property portfolio to the next level. And this is called a duplex investment or development strategy, okay? So I want to talk to you about what a duplex is and how you can actually manufacture equity within the development without the market actually having to increase in capital growth. It's a way that the big developers make money by buying a big parcel of land, putting all the roads and doing all the civil works, and then selling off the retitled individual allotments. Now, by doing that, they're obviously increasing their profits and making a tidy investment profit at the end, okay? This is the same as that, but on a lot less scale, a lot smaller scale, therefore takes a lot less risk and obviously a lot less money that you need to be able to do it. So let me talk you through it. It's a really good strategy for someone wanting to advance to the next level of their investment portfolio. Okay. So let's assume that we're buying a block of land, let's call it a 500 or a 550 square metre block of land, okay? Now we're going to build a duplex on it, okay? So at this point in time it's got one title, okay? So we're going to build 2 4-bedroom, 2-bathroom homes on it. It's got a subdivided wall or a firewall that goes through the middle. And one side's a 4-bedroom, 2-bathroom, the other side's a 4-bedroom, 2-bathroom. So this would be a newly constructed property or a house of 8 bedrooms and 4 bathrooms, okay? So what we do, we build the property and we're paying $700,000 for the land, the 2 4-bedroom, 2 bathrooms to be constructed, and obviously the retitling and the restructuring costs to be able to get different titles. So once we've built it, we're restrating and retitling. So we've got a separate title for this property and a separate title for that property, okay? So that means we can either rent them out separately and we can either sell them off separately as well. So we could, for example, sell one and keep one, or sell both of them, use the equity gain to then pay off your own home or put it into further projects, okay? So let's have a look. Let's say $700,000 is the purchase price. We're going to go to the council, we're going to subdivide it, so we're going to get new titles issued so we can sell them separately. By doing that, it increases the value of the actual land, okay? So now, market comparable sales for a 4-bedroom, 2-bathroom in that area is worth $420,000. Okay, this one is worth the same. So if we were to sell them separately, we would effectively get $420,000 each property. We paid $700,000 for it. So what that means is that we've got a profit of $140,000. Let's call it $70,000 on each property. So that's our uplift in equity without the market even increasing. So we've got a couple of options once we do that. We can either rent both of them out, and for this particular area, we're going to get $420 per week in rent for each one. 420, 420. So rent is $840 per week in rent. Per week in rent, okay? So if we kept both of those properties, $840 times 52 weeks of the year, divided by the purchase price of $700,000, we would be getting an all-round 6.2% thereabouts rental return, which is a very good rental return. Be cash flow positive after tax, so it wouldn't be costing you much money to be able to hold those 2 properties, okay? Rent them out separately. The other option that you could have is sell one property, so sell one for $420,000. You got some sales commission to obviously sell, a real estate commission, and you'll pay a little bit of capital gains tax as well. But let's say you come out with $400,000. So we sell that one off to somebody else. We've got $700,000, which is our debt. So we're going to pay $400,000 off the $700,000. So it leaves us $300,000 with a mortgage of $300,000 on one property. It's renting out at $420 per week. Okay, so based on that, we're getting a 7.3% rental return. So severely cash flow positive, not costing you any money, but putting money in your pocket each week, okay? So there are your different strategies how you can make money in a small development project like a duplex strategy that we're helping our clients with now. So let's just say we did hold both of them. We could then leverage against the equity of the equity uplift, so $140,000 equity, to then be able to duplicate this process and do it again, snowball. So that's how you can do it. Then you might sell one, pay down the other one, and so forth. So it gives you a lot of flexibility because you can actually make money or equity without the market actually having to lift. Now you can't do these types of properties anywhere, so we need to be specific in where we're targeting. So that's what we're helping our clients with now. Got a lot of different sites around Australia that we're helping with this particular strategy. So I hope that makes total sense. It's a more of an advanced level of investment, and then obviously the next level above that is potentially, you know, buying something with an old house on it that could either be bowled over and subdividing to 3 or 4 blocks and putting 2 or 3 townhouses on it. That's the next level again. But this is a lower risk entry level development profit where you can actually exercise and actually make a tidy little profit along the way. If you'd like to get some more information on where we're doing these particular properties, how it actually works to your individual strategy, where you are today, and where it may take you in the next 4, 5, 6, 7 years. So please reach out at info@curtispropertygroup.com.au. So info@curtispropertygroup.com.au, or just give the office a call. We're happy to sit down with you, talk you through this particular strategy, because it could be the key to taking your portfolio to the next level. Thanks for listening and have a great day.